Okay, here we are with the 11-1 work together. We're going to be posting some more transactions to a general journal. And this time we're going to be using 3 different accounts that we're going to post the transactions to on the journal. And then we're going to take those same transactions and post those to the ledgers. In part 2, and in the ledgers that we're going to use in part 2, we're going to use the accounts for the item. And then we're going to use an accounts payable ledger, and we're going to use the company's ledger that created the transaction, or that was involved with the transaction. So we've got 2 transactions. We've got our chart of accounts, so we can look for official account titles if we need to. So let's start with transaction number 1, December 5th. Bought supplies on account from Milam Corporation. So we'll start here with December 5th. So the first account that's affected with this transaction, the supplies for the office. Supplies for the office. So we'll put supplies office. Sorry, I forgot the S. There we go. Supplies office. That was on memo 57, so our document number is M57. And then this is for Evans Equipment, bought the supplies. So Evans Equipment bought more supplies, so the value of supplies increases. The increase of that asset, hopefully it's stuck by now that supplies is an asset, something of value that the company now owns. So any increases in an asset goes as a debit entry. So $532 debit. And for this next part, on account from Milam Corporation, instead of using an accounts payable Milam Corporation account, we're gonna this in this scenario, the business is using an accounts payable ledger, and then Milam Corporation is part of the accounts payable ledger, so it's a subsidiary account for the accounts payable ledger. So this transaction is going to end up going into 2 ledgers. One of them is going to be accounts payable, and then the other ledger for the subsidiary, Milam Corporation. So we're going to put both of those on one line. So accounts payable. So it's going to go in the accounts payable ledger when we post it to ledgers. And the subsidiary account for accounts payable is going to be Milam Corp. You got to put that period there for abbreviation of corporation. And accounts payable, that's a liability. So any increase in a liability is a credit entry. So $532 credit. Okay, so now we have the next one, December 7th. This one's going to be different than the first transaction. So in this one, it says returned merchandise to Griffin Inc., $248. And this is on debit memo DM32. So in the instructions, we have debit memo, so a new document that we haven't used yet. So this is going to be to two ledgers for this one on one line, and then to a purchases, returns, and allowances ledger. So let's see if we have those in the chart of accounts. Sales return. Okay, here it is. Purchases, returns, and allowances. Notice we have a lot of other different types of accounts with this chart of accounts. A couple spots for accumulated depreciation, capital stock accounts, dividends. A lot of extra stuff here. But here we have our accounts payable ledger, then all these subsidiary accounts that are part of that accounts payable ledger. So Griffin Inc., part of that accounts payable ledger. As I've mentioned in past worksheets, it's always good to open the book to look at for an example on how to do these two. So accounts payable, because we've got that return, so that's why this one's going to be listed first. The return instead of a purchased. Griffin Inc. And that's on debit memo 32, so DM 32. Then the amount is $248. So that Griffin Inc. was an accounts payable account, so a liability. So Evans Equipment returned merchandise to Griffin Inc. So that means the amount that's going to be owed to Griffin Inc. is going to decrease by $248. So for that liability, decreases in a liability goes in as a debit transaction. So 248 debit. And the other account that we're going to use is going to be a purchases, returns, and allowances. So you can look at the chart of accounts. Purchases, returns, and allowances is an expense. So that money's being returned back to the company, or the value of that merchandise is being returned back. So that's an increase, and that's going to increase the value of the company, which increases owner's equity. You can see that falls under that expense umbrella. So that increase in owner's equity makes that a credit entry. So there is step one. So now we're going to go to step two, where we're going to enter these transactions into the ledgers. So we'll start with supplies office. So we'll go down here, find supplies office. Here it is, right at the top of the second group. The date, December 5th. And that's a general journal, page 12. So since it's a general journal, we're going to use a G. We're part of the posting reference, so G for general journal. Then page 12. We got that page 12 in the top right corner. So now there's a debit entry of 532. So the previous balance was a debit balance. So let's add those two together then. 2948 plus 532, 3,480 for our new debit balance. And the last step is we have the account number for office supplies, 1145. So we'll put that back up here on the journal like that. Now for our next line, here it says, actually, I'm going to go back up to the instructions here. Post each general journal entry to the accounts payable and general ledgers. Entries that require more than one posting reference in a single journal line must be separated by a slash with no spaces. So because these next two, we're going to enter those into two different ledgers. We're going to enter that into the accounts payable ledger, and we're going to enter that into the Multicolumn Corporation ledger. So that means we're going to have two account numbers here for the posting reference. So let's start with accounts payable. Close that one. So the accounts payable is the next one below the supplies office. So December 5th, so put a 5 there. That was general journal, page 12. That's a credit entry, 532. 532. The previous balance before this one was a credit, so we're going to add those together. 84.93 plus 532. 9,025 and 50 cents. Then we have the account number 2110 into the posting reference box. See if it turns red. Sometimes it does. But eventually we're going to have the other one from Multicolumn Corporation in here too. So that takes care of the accounts payable ledger. So now let's enter this same transaction into Griffin. For the 5th, general journal, page 12. Credit balance or credit entry of 532. So the previous balance was 958 credit. So add this plus 532. For the new credit balance for Griffin Inc., 1490. Then the account number 220. So go back to this same box. We'll put that slash mark in there. Remember, no spaces. 220. And I wasn't paying attention and put that in as Multicolumn Corporation. That should have went in as I put it in as Griffin. It should have went into Multicolumns. My bad. I looked at the wrong line at the time. So let's transfer all this down here. So the 5th, G12, 532. Easy to make mistakes. 1975 for the new balance. Let's change that account number to 250. Now we got it. We just need to change Griffins, which we'll do on the next one. All right. So Milam Corporation takes care of that transaction. So let's get to the one on the 7th. Accounts payable. So we'll start with the accounts payable ledger. 7th. G12. This is a debit entry of 248. So the previous balance was a credit entry of 9025.50. So now we're going to subtract instead of add. So minus 248 brings the balance down to 8777.50. And the account number for accounts payable 2110. So we'll close that, and now we're going to get to Griffin, and I still need to fix that mistake that I put in earlier. Get rid of those. Okay. So the 7th, still G12. Now we have a debit entry of 248. So credit balance, debit entry, so subtract. So 958 minus 248. Brings the balance down to $710 for credit. We've got the account number 220. So we'll click back up there, put that slash mark in there. 220. And then the last entry for this one is the purchases, returns, and allowances. That's the last ledger. The 7th. G12. That's a credit. 248. So we had a credit balance previous to that, so I'll add that 248 to that. 4194.60 plus $248. New credit balance of 4442.60. And the account number 5130 back up to the journal. And that is the 11-1 work together.